What's the first thing that you are taught to do? You're taught to always grab the state of the stock when you're dealing with the open. You're always taught to grab the state of the stock based on yesterday's late day data. So the latter part of yesterday. That's how we grab the state of the stock. When that state is flat and sideways, it leads to the possibility of a very, very explosive open. So flat and sideways can lead to explosion upward or a sharp drop downward out of the sleeping state. You go from sleeping to or dormant to activity. Quietude leads to explosiveness. That is why your best state is always flat. And this is what you can do 5 to 10 minutes before the open every day if you're a stock trader, is to grab anything that is laying down like this in a sleeping state, flat and sideways, because those have the highest odds of explosive activity out of that state of quietude. It's very clear what Palantir did. It gapped up, but it opened right in the perfect location for buying. We call this +1. That position is +1. This would be +3, and in between would be +2. So your best buy zone is always right above the sleeping state, that tight, narrow state. And Palantir opened perfectly there. So this bar is a buy in an anticipatory way. Now, I don't know how fast this bar took off, but we can take a look by looking at the 1 minute. Yeah, so after 1 minute of trading, you could buy right into. I teach that you should really have a 1 minute filter at the very least. Let the stock trade for 1 minute or even more, but let the stock at least trade for 1 minute to make sure that it's real. Because oftentimes the activity in your first minute is not real sometimes. So if we can get past the 1 minute and it's still powerful, then we know with greater certainty that this is real strength. It's not a fake out. So there's your buy after 1 minute. And let's go back to the 2 minute here. So you're coming in here somewhere as with your buy. Let's say you're doing 2 lots. You may not be able to get your stop under here with a maximum loss per trade. You may not. If you can't, then you've got to go under the bar. If you can get your stop under that base, under this entire base here, it is preferable. But if you can't, then you have to use the event stop. It's very clear that the explosion gets you a profit-taking opportunity up here somewhere, where if you're following my method strictly, you cannot sell all of it. If you really want to be strict, you can only sell up to 1/2 of what you have. So if you had 3, you could only sell 1 because selling 2 would be breaking the half rule. If you have 2, you can only sell 1 so that you don't break the half rule. That's really being strict. I tell traders now if you have 3, you can sell 2 if you like, just leave something in. But I used to be a lot stricter with this rule where no, you can't break the half rule. Keep half in. And the reason that I used to be very strict like that is because most traders will be more profitable by leaving more in the stock than taking more out of the stock. I hope you understand that. Most traders, including you, will make more money by leaving more in the stock than taking more out of the stock. That statistically, you're more profitable by leaving more in on that first profit take. You have a right to move your stop to break even, but it's not mandatory. Now, sometimes I do and sometimes I don't. On explosive moves like this, I don't like to do this, guys. I don't like the break-even stop. So when you're coming out of such a flatness, I really don't like the break-even stop, because oftentimes you will get nicked out of a break-even stop. and I just don't like it. So I usually keep my stop where it is until I have the right, when it's a scenario where it's this flat, where there's a scenario when I'm exploding out of this type of flatness, I don't usually do the break even until I get the right, boom, right there, to move my stop to the pivot. It's the pivot stop adjustment, which I call P1, pivot one stop adjustment. That's the one that I like the most. I'm not a huge fan of the break even. I'll use it every now and then, but I like the pivot one stop adjustment much better as being the first adjustment. I just find that traders tinker too much. You guys tinker with your trade too much. And the break even stop is borderline tinkering too fast, adjusting too fast, moving too fast. It does have some benefits, but a lot of times that those benefits come at cost, at nick out costs. You get nicked out of your trade very often with break even stops in the wrong location. I still teach it. I still keep it in my teaching because sometimes it is sound, but the pivot one stop is the main first stop adjustment. Once this is your stop is adjustment, your profit taking right comes in again here on the new high. So this play was perfect in that I'm always trying to get you guys to do this. Sometimes you don't get the add opportunity. And in this case, we didn't get the add opportunity on the way up before the first profit taking right. But I'm always trying to get you guys to do this. Always trying to get you guys to put the boxes and the X's in the right spot for this. This is the whale, and we're always going after a whale every single trade. Every single trade. Let's do it again. Here's the whale. Always trying to get you to get the whale, put the things in the right spot. Sometimes you're able to get an add here. That's your profit take. Get in on the first pullback as long as it doesn't break halfway through the first leg. This is leg one. Here's leg two of the whale. I'm going to try to get 2 X's. And if you want, you can add your stop adjustments, initial stop, break even stop, if you're going to use it, P1 stop, and then here is big bar moving average stop combination once you get past the first X. Now, I want to talk about something more nuanced here in this trade. The explosiveness in leg one would lead me to take it all on the new high. You see, I don't want you to take all of it on the first profit take, and usually I don't want you to take all of it on the new high profit take either. But if the leg one is super big, then you take it all here because leg one can eat into the potential of leg two if it's too big. If leg one is long, then it is eaten into the potential of leg two, and you can take it all on the first opportunity of leg two if your leg one was super big. You got it? Yes, I'm going to see some twos here. Good. So this was so big that you can't expect the new high to be extensive because the first move ate into the potential. So I would take it all here. Instead of going for, usually guys, you go for 1 and 2. You don't take all of it there. You go for the gusto with the rest. But if the one is super long, then you take it all there. And that's the nuance that I want you to know. So these are little, very small, but very powerful things that your average trader, market participant does not know. When do I take it all? And when do I not take it all and let it ride? And this is one of those nuances. Very, very valuable. The other thing I will say about this is Palantir does break out like that, let's say, at some point. This is not part of this trade. This trade is over right there. It's important to understand what when a trade is over and also when a brand new trading opportunity is presenting itself. You can make the error of thinking that this is part of the same trade and you should still be in it, and that's wrong. So this trade is a different trade if that were to happen. It has nothing to do with this trade. The whale completes it. Boom, done. Now, anything that happens later is a different trade from this one. Perfect examples of trading from position one and trying to maximize whale potential coming out of position one and knowing when to take partial profits versus all of your profits on the new high or new low if leg one is larger than normal.